Good morning, friends. This is Jeff Arcos. Welcome again to the daily webinar. Today we are 7th of January 2020. Mind you, this one is not meant to be a financial advice. This is only an education presentation. Please consider term and condition before you continue. Send when you're receiving this recording. As well, thank God for another day to my life and pray His blessings today. In Jesus' name, Amen. All right, just review a little bit of last week. I wasn't expecting great deal of, because of the Christmas holiday, the market closed out. Sorry, the New Year's market closed, but we did have that the yen JPY index. It was quite in a bearish. Everything was indicating a bearish sign. So I'm looking for the yen longs. Euro yen was one of those. Thank you. Euro yen once of those as the market was being up and down, so that was a quite good there. So I'm looking to trade around this area, and the market just completely went the other way around, so there was no trade at all. Then I did have the pound yen, so beautiful sort of kind of retracement on a level of support, and that was and the market triggered me and get. That's what I liked, in the beginning of the trade, have that midpoint as a savior over there. So 100 pips went off, and yeah, I wasn't expecting big things happen for the period. That's the dollar. So we got the dollar seems like it's only going one direction at the moment. So up and down, up and down, up and down. And so every retracement is being a good opportunity just to short that one there at the moment until the market does not change its directions. That's where it is. This one's going. So we're looking now to go long. Euro US was one of those, ready to trade from there. And the market the entry, and then I moved to this next fractal, the stop loss. So 44 pips are gone. Then I did have the pound US, beautiful retracement on a support level, weekly in the way up. The pound is not was that strong, but the US was very weak. So everything was in place, and the market it did broke at the beginning. It reached the 100 pips, become the break even, and that's it. So that's sometimes it seems like this strategy has been working quite good. Having 100 pips take profit, first profit, and moving the stop loss to break even. So once the 100 pips in the pocket, break even, whatever happened with the rest, it doesn't matter. Now with currencies like a pound US, pound yen, all these high volatility currencies, 100 pips is there. With the other ones, actually I find 50 is quite good. So they call the feature in the EA the partial take profit. So I put a partial take profit, 50% of the position when it reach 100 or when it reach 50, break even, and then the rest that it is. So that's working quite okay. Euro Canadian, just took me with a hint over there, but I put a very small stop loss as yeah, it was there, so 42 pips, and that was the performance of last week, which I was not expecting a big thing anyway. So we only have the yen crosses. Remind you that today, this week on Friday, we have the non-farm payroll. So that could be, very much expecting and waiting for that the market as being the first month of the year. All right, and so that's there for today, Tuesday. We only have the not really much, and the 8th. After 1 a.m., we have a non-manufactured PMI with the U.S. Now, as we know that the things has happened between the U.S. and that Iran could move things around very, very, very strongly from there. All right. So we got that New Zealand yen as the first week. As I say, we're waiting for always it's good idea to wait for a little bit of retracement because everything can happen from there. In New Zealand yen, So there it is, perfect retracement. So when those retracements is happen, one of the good things that over there it can be doing now is now I move from the midpoint, I move to this one. Now there are two options whether we can leave the midpoint or wait for the breakout over there. I prefer personally the breakout there. Look, we can get a better price by looking the midpoint, but this is the final filter whether if the market is gonna, move or not. It's gonna move there. We have a very strong weekly down, so everything over there over here, it will be quite interesting. The that one there. Then we did have the Australian yen, so everything was over there. And as you see, if I would activate the A would be putting a position over there. So retracements is very essential. We're gonna see a little bit about why sometimes it's safe to wait for a retracement there. Australian yen, and that it is. So as you see, look in the retracement over there. So the same thing, and here I move now for there. Then I'm very confident from there, and actually my stop could be very small. From there I look in the group consolidation instead of try to get this, which is too much for that one there. Then we have the euro yen, same thing. So we're looking to try the euro yen, and we were looking directly to the chart there. All right, so euro yen, and this one got it. So right over there, it got it to that. Could be a bonus. Looking, I would have preferred to get that one there, but that was the rule over there. So here we are. We are in a position. We got that one there. Now here is interesting that actually, if I look from here to there, this one is still not fixing. If I do the Fibonacci calculation, I got the first one over there, and then the second one over here. So it's interesting where to gonna be hitting over there. So where it is to here is a nice 238 pips, which is quite nice. And yeah, and plus 100 pips will be take off from here when the market is no doing over there. So hopefully we'll survive that one there, but that was the move from there. So we'll see what happened. And there it is. These targets are, especially the 1618, 161.8. This is actually quite cool. Every time you see, those moves like this when the market retrace and pointers over there, is a very sort of kind of easy way to say, okay, I want him to here. You're getting quite nice points, whether you doing long or you doing short. Distance is not friendly, and there, so always that 161.8 is a nice target to get it over there. All right, so that was this one is in action. So we're looking over there, see over here, the was a strong break, and there we are. That the yen is very strong, the euro is weak, so everything matched perfectly. And after that, there's nothing that we can do about it. The trade is a trade. We just make the decisions, and that's it. It's at the beginning of the week, and we only looking for those ones over there. Put it there, euro yen. That was the euro yen. Pound yen, I think, is the next one. So that was already in an ABC, very strong there. And again, from here, yeah, just looking over there, pound yen, and that was from last week. So at the moment we are over here. With this one, I will not trust. I will now change into the bottom over here. So that was just the last week trade. So I just put in the sell. I got in the default everything. and I will be waiting for this one to hear the euro gold got it. This one didn't. This one just continue going through, and that's it. Now this this feature as well has what I call that you can do that the midpoint retracement. For example, that feature is quite nice. If, for example, you want to trade in this position, so the market is breaking. So here it's telling us, yep, this is all of these trade, but you want to trade on the midpoint. So what the EA does is waiting for the pullback and then runs over here. All right. So for example, if we are over here, the same thing, we say that, okay, that's a nice break, you want in there. So the EA will wait over here, and here it will get you into a trade, and that would be into a loss over there. So same as this one. But like I said, I like to prefer to the, it's very safe to wait for the pullback of those one there. And the last one we got is the US yen. So the US yen is over here, there, yes, if in the morning we activate it, yeah, and everything looks quite nice over there. The US is being weak as well from uh, 2 weeks now, and that's a good reasons why to look down there. So. And this one, it did not reach it. Now, this one, I don't know whether to leave it over there or not. Now here, because this US yen is less volatility at the end of the day, I can use both. I know that, it could, um, this one, I can bear that one there because the volatility is lower than the other ones compared. So, and that's it. So that's the only thing. Once we pick, what we're looking for, that's a good way to see those ones over here. All right, now in here, yesterday I was saying about the power to trade in two groups, and if you're looking, um, if we're looking over here, Australian yen, pound yen, and euro yen. Now, when we're looking the correlation, sometimes it's easy actually to see on the line charts, because and this is what I noticed, and this discovery actually came when I used to have my own. I don't know if anyone, Helen maybe remember from my currency string meter, the one I used to have. Remember the three chats. I'll do that one just to explain a little bit more. But there we are. So Euro US, as you see, once the Euro US start running one way, for example, that was a nice ABC from there. Oh, this is the weekly. This has to be the daily, and we're looking for the daily there. Yeah. Euro yen didn't show up over there. I have to do that again. Didn't show up over here. What happened with the other one? No. Oh no, this one's normally, this cloning does not go through through a different currency, only goes through the same currency. So that's why we don't see clone. But now here is interesting. If you look in the behavior on the close candle close, when this bump is forming, the euro yen forms the same bump. When this ABC is forming, the euro yen forms the same ABC. Not perfectly, all right. And when you see these ABC like that is represented over there, and so on, So when you see that, yeah, things like that, the dollars normally tends to do. Now, when we look at the pound US and the pound yen, look this consolidation area, and look over here as well. So it's really, to the point that when you see the pound running one way, this ABC outside there, it has a big value, to anybody else. At the moment, I believe the market need to correct after the December holidays, and this is what is happening right now. But you see, the moves is actually nearly the same, and there we are. Look, the Australian US, if we're looking at that break and the ABC break over here, is exactly sort of kind over there, if we're looking over here. So if you see the Australian US going one direction, the Australian yen will actually move in the same direction. And that's, as I said, it's a big retracement at the moment. But that's how, I've been looking these ones here. So if we look in the New Zealand, no, New Zealand yen, Canadian yen, and Swiss yen, and here we look in the New Zealand US. Now this one, US Canadian, will go opposite because it's the second currency, so since one's the opposite as well. If the Canadian would be first, like New Zealand is first, and the Swiss will be first, then we will see on the same direction. But the same thing. So the correlation between the US group and the yen groups are very outstanding. That when you see something breaks like that, these ones will follow. So imagine if you're picking only two groups. Now, how hard could it be to watch once a month two groups there and looking for the right direction into that? So this is what is really it is. Now here the same, if we're looking, if I do that and I see this and I look right over here, that's exactly when this Canadian yen runs, because here it's telling me Canadian is a strong, US weak. So the Canadian, which is the first currency, will run up over there. And look how really, I don't know, why no one has made an E8 out of these two correlation. I did meet once a guy who has something like that. Suddenly he made an E8 and said, wow, this guy's as well discovered the same thing. I know it works very well. And but the probabilities are quite strong and quite high. So if you're looking there and we're looking over here, what also you need from there, and look right there. Now we look in the concept of Bill no, how is the guy from the fractals? Well, forgot his name. Bill Williams. Bill Williams is enough. All right. So if you look in this is a signal fractal, and look where it's positioned. Look this other signal fractal here. This could be my signal fractal too if the market breaks from there. And look what that that signal fractal as well there. That's a very, very interesting sort of kind of way to look. That's what sometimes I'm using the rejection points when I don't have a fractal. This is my fractals for me. This could be my fractals for me. And how easy, could it be this way by looking something like that, But the key important is find consolidations, wait for the break, and look the first fractal out of the break, and that's it. Then you're done it from there, and take it, And then if we do that, the calculations with that, with our magic tool over here, there we are. Look, target number 1, target number 2, and walk away. We look the calculations in here. Target number 1, target number 2 did never reach it, but target number 1 would be, and the stop loss would be passing over there. So if you look there, is this quite strong. Out of there. Is when you're looking that magic of looking the first fractal down, and you're looking from there, or the first fractal up, and you're looking from there too, it has his value regardless of anything there. When you look in that, I would not take that fractal because the market breaks back again over there, so I would take this fractal over here, But this first fractal up or down, and you only take the 161A, you don't take in the tops and the bottoms of the market. I don't think so. You're gonna do very bad, isn't it? This one, let's see, we would have missed it. There, that's fine. So you see, this fractal would be not that one because the market did a new fractal lap, but here definitely it is there, and that the 161A will hit it over and over all the time. Now that's no bad targets. It doesn't get the tops and bottoms of the market, but what it gets is quite nice over there. All right, so this is what it is. And when the market running one way, unless we don't have a first fractal reversal up or down, you just continue looking, the direction, and it is. But to look at the US and the yen groups, it is a quite magic thing to observe. Now, this is the way I used to do before. Let me see which way I do it. I'm gonna do that way. Now, if I trade, for example, here, if I used to trade that Australian yen, okay, so here I'm gonna be looking Australian US and US yen. So let's go back to that. The candles is here, and the candles is over there. That was my very old index meter way of looking trade. All right, so this is so whatever pair I used to have over here, I plotted over there, and I used to have a rule. Now I don't remember even the rule that I used to do, because on here we got the euro, we got the pound, Australia, and New Zealand. Here we got the yen, we got the Swiss, and we got the Canadian. So that's how we have over there. Now, because of the order that we have, when the pair that I'm trading, okay, is one pair is like in the group number 1, and the other pair is in the group of number 2, I'm looking here, the both has to go on the same direction. Now, this is going to be a little breaking for your brain, because that's the order that I have. We have Euro, US, so now everything against the US, 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 and US. But here we got the US against the Japan, US against the Swiss, and the US against the Canadian. So it's the other way around. So let's see if I use the Euro Australia. So the Euro is here and the Australia is there. So now I'm looking here for both going opposite. So if I have the Euro US here and the Australia US over there, I want one to going up and the other ones to going down. So let's do some practice, and then you're gonna understand much better this. So my question was that when I have a trend line and I have a candle that it breaks that trend line, that's in the 11 of the 10. So let's put in a yellow color so we can see it. This was the old way. Do you remember that, Helen? That's the old way we used to do, isn't it? So if this one was over there and I look in the 11th of October, I want to see here the 11th of October. Let me put this one there. And that could be somewhere over there. That's the 11, and that's the 11th of October over there. Now, when we look at this and we see here clear that the market has a break on the Australia US, and in here we got a break on the US yen, a big break. All right. So what is still telling me here that, for me to trade the Australian yen long, I want to see the Australia has to be strong, but the yen has to be weak. All right, so if I want to be see here, I want to trade the Australian US has to be strong, and I did not have any sort of the index meter, but only this. And so therefore, I'm looking over here and I'm looking the Australia and the US has a breakout, so the Australia is strong. And the US breaks up because the US is strong, but the yen is weak. So therefore, if one's going up and this one is going up too, but because of the order of the pairs, so that's mean this is going up and this is going up. So then I'm gonna be trading this one up. And look how beautiful is that. Now, is anybody has a question? Now I think I mess up big time now your head here. But this is how all these ideas of the index meta, has come up and from this beginning. This was my beginning of looking this way. All right, and this is why I look the US pair and the yen pair, very, very similar thing over there. And here, the only thing I was using is just magic trend lines and looking for a magic day like this one, for example. And that's the 12th of November. So if I look over here and I go to the 12th of November, that's the 12th of November. There we are. 12th of November. There we are. Now, if the Australian yen is going short, I don't know the quality of that trade, and I need to know if the Australian is weak and the yen is strong. So here, the Australian is the first currency. It breaks that trend line. So that's mean for me the Australian is weak. And here, the US yen has a sort of wedge pattern. Is breaking not maybe the first day, but the second day as well. If I move one bar up more, if I wanted for more confirmation. Here is telling me that US is weak, but the yen is strong. So the Australian is weak and the yen is strong, where these ones will go. And voila. So that's it. That was the whole hard work to try to figure out the strength of this. So that is when I noticed that these yen pairs correlate a lot with the US in many, many other ways. So let's look one more. I don't know if you knew about that, but say this is, so that's the Euro Yen, and this should be the Euro US and the US Yen at the bottom over there. Now, here is a bit sort of kind of crazy, but if I look for shopping levels, the normal way we're looking, and we say, here we have a nice retracement, and here, now that candle is not that bullish, this one either, but this one definitely it is called my attention, isn't it? That candle definitely has an ABC, and that happened on the 11th of December. So I want to be looking now here, what happened on the 11th of December. So that's the 11th of December there, and here is the 11th of December over there. So the Euro US it done exactly the same thing as the Euro Yen. He has break up, come back, and make his, and with a beautiful day. And the US Yen has done a big retracement. Maybe put it over there. And it has a big retracement as it copied. But here we got on that day, I don't know the next day what happened, but that day I got a big a bar up over there. So then I know when the Euro US go one gate, if the US Yen is in tune, so that is happen over here. And now that I have the power of the Fibonacci, I can say I'm gonna trade over there, put in my stop loss, and get my target over here and walk away. looking just, simple way like that. And that was the only way I used to, and used to do all of this. I used to have a workshop based on this one like that. But like I said, it's just now that I have the table, things are quite different, all right? So going back to yesterday, so if we say this is the Euro US, this is the Euro US, and this is the Euro US, and we got the monthly over here, we got the weekly over there, and the daily over here. So right over here, I really want to know, all right, on the so every time I see this high, I want to look an opportunity to go short. I want to look at the opportunity to go long, to go long, to go long, short, long, and short as the market provide me for the opportunities. This is yeah, that's the monthly, and this is the weekly over there. So if we set up the synchronized object there, and synchronized objects over here, and synchronized objects over there, if we say that at the beginning of that month, at the end of that month, and the beginning of this month, I want to get something right at the last week of the month. I want to get from that, and the weekly provide us with a very nice. Now, as you see here, there was no retracement, no nothing, just the first day of the week over there, and that it is, the market runs from that. It's been very volatile, but that's how that. So here we are. So I'm looking for the first week to going down, and in this case, didn't march that well. Here we have another one, and what I'm looking is for that week, the magic week. Now, two things normally is going to happen in the top. The market is going to continue go through, or the market is going to bounce from it. And this is the opportunities that we want to be looking, that right over there we want to be seeing, the opportunities that we are at the top of the month, and we're looking at weekly like that to tell us the market is moving in one direction, and moving like that. So now if we look in here, this is the Euro US. So let's look at over there, the Euro US. What do you reckon the Euro Yen will do in exactly same level? Now here we see the Euro Yen did have retracement, but is continuing in his way up, isn't it? Now let's look here. The top of that, what the Euro Yen will do right over there with the same, it went a few weeks on the way down, and there we are. Now if we're looking up the end of that one there, we already see that Euro US, that was maybe no. So Euro Yen. So this one actually was a month before when the Euro Yen did the first run, but because the Euro US was continued, the market retraced over there before it has his week up. What happened right over there? So the top of the bullish month, we're looking for a turning point, and from there, whatever is happening, there we are. Now this is what I want you to be looking. So let's see if I decide to try it there. All right, so the following week. So that's the top of the month, weekly down, daily break, and that's it. Now, I want to be looking here is what the Euro US is doing. And the Euro US is already has a break, pull back, and we have that. So the Euro is weak. right? So the euro is weak right in the top over there. Excuse me. So the euro US is right in the top over there, and and things like it. Now the US yen is going down too because it's breaking down that. I don't know if this is going to happen, but that trade is justified by what I know that it works over there. So that's mean that I can trade very confident from here. And from that point until the next month, I just continue looking for continuations from there because now we got from there. Now the market is continue. How do I know that is this a good day to look into trade? You know, and so if I look at the Euro US over there, look that big bar. I don't know this is going to happen, but at that day it is a big bar down, and the US yen is struggling over there. So the Euro US down, the US yen down, so the Euro yen will have his big run, and this is the pullback because of the Euro US. So this is when I look that you know, this is when I'm looking these correlations between these two pairs. Looking the every time we look in the Euro US, or let's see the Pound US over here, and whatever decision we make based on that, you know, so if this is a decision long or this is a decision long, I want to see that I actually navigating at the bottom or the top of the bar. If this decision up over there, you know, I want to know where I am right over here, and that it is. So if I look the pound US over there and the monthly is on top of the month, the bearish week, the pound yen will have nearly the same effect. So apart from have the strategy, if you minimize the amount of currencies to trade, is not this a good way to keep away from unnecessary trades? You know, so you forget about your Australian, Canadian, New Zealand, pound Australian, Canadian, New Zealand, and you just focus with two groups, less trouble. But tell you, you know, if you're looking for a move, these two really move very, very much. So, so yeah, so that's really, you know, that the whole, I think the synchronization between these ones is actually quite nice and quite good. That you know, if you're looking, you know, New Zealand, US, there, this is up, and this is the first wicket down. Maybe I would have tried that one there long. This is a nice ABC because two things going to happen in the market. It's going to break or bounce through. So I trade the break, and then I trade the bounce. But if I look the New Zealand yen in the same week, you're going to have a big surprise. So you're not getting only one move like this one. You know, that's a nice 333 move, and this is another nice 572 move right in the same week. So the less you look, the more you focus. All right. And when the opportunity is there, we have 12 bars, 12 opportunities, but every opportunity can really make a big difference over there. All right, so that's a very nice way to, you know, keep less. That's what you normally see in my list. I got the US and the yen group because this is only what I'm going to be looking really at the end of the day. And the rest, you know, I'm observing the pound, you know, sometimes the, okay, Lawrence, nowhere. And yeah, so that would be the the good way, to keep out of unnecessary trade. And then of course it comes the index meta, when in here we want to be looking. So that's what sometimes, I don't know if you see on Monday, I normally like to have the US and the yen there. All right, so this is so I like to keep that way, so you know that it is, because this is what is the two most important index in the world. And I want to be looking when both of these agree, then you're going to have these two marvelous trades over there, because when the US is weak and the US yen is weak, then you can trade. Okay, look the correlation, because now I see the correlation is very, very high. In every week, one of the first thing I'm looking, okay, where is the US and where the yen and where the US it is. And that it helps me to immediately, say, okay, I might have opportunity this week. When I see the yen over there and the US over there, then I only worry to trade the other mix, whatever it is there over there. And then I'm looking over there. So yeah, so that's good information for everyone. So apart from having this monthly beautiful strategy, weekly over there, so if we reduce the amount of currencies to trade, tell you will not miss in there. The yen crosses has a lot of movements, and actually the spreads are very. If you go through all the other currencies like these ones, then look, for example, the spreads of the New Zealand yen 3, 2, compared to whatever of these other currencies, you're gonna be paying quite big spreads from there. All right, my friends, nothing more for today. We'll see you tomorrow morning. See what the yen is doing now. We are in a nice retracement. This is what I was waiting for, and now could be a good opportunity to try from there. All right, take care. Cheers and bye. Bye, everyone.